So we've heard a lot of talk in the media about mortgage forbearance or getting your mortgage payments deferred. So we thought we would come on here and just talk about the difference between the two and how you should go about asking for this if needed.
Yeah.
So maybe first off, you could tell us the difference between a mortgage forbearance and deferred payments.
Yeah, and there's subtle but important differences between the two. What most mortgage companies are offering right now is a forbearance. And the way a forbearance works is basically between a certain period of time, let's just, for example, call it 90 days, you don't have to make payments. During that time, though, your interest continues to build, and then usually at the end of that period of time that they've given you, the entire amount that you've skipped comes due at one time, called a balloon payment. Mm-hmm. With a deferment, similar in that you don't have to make payments for a certain period of time. Again, let's use 90 days as an example, but your interest generally doesn't build during that time, and then oftentimes they move those payments to the back of the loan. But again, forbearance right now is really kind of what we are seeing most banks offering. And depending on the bank, like B of A right now is only offering 30 days. Banks like Citi and Chase are offering 90. But the important thing to know is when you agree to that, you're agreeing that after that 30-day or 90-day period, that you can pretty much pay everything you've missed at one time.
Okay, so if somebody's really in the position of needing deferred payments or forbearance, how should they go about getting that?
I think the first thing to do is call your actual bank, not necessarily the lender that did your loan, but your actual bank or the servicing company, and figure out what they're actually offering you. Get it in writing, and then you can contact us or your lender or your agent and have us look at it. I think the biggest thing is, I think a deferment is better for you, the consumer, because again, it usually moves those missed payments to the end of the loan. Forbearance is generally better for the bank because they're giving you a couple months of not paying them, and then they're still earning interest and making all that money kind of at the end of that period. So if you really need that, call your bank, call us, whoever your agent is or your lender, have us look over the details to figure out what exactly they're offering you.
Okay, and also I've heard a lot of people say that it doesn't affect your credit, which I know is not true, so maybe you could go into that a little bit?
It does and it doesn't. Like, during the period of time that they're essentially telling you you don't have to make payment, that does not get reported to your credit. That doesn't hurt your credit. What can kill your credit is once that, and again with the forbearance, that money comes due immediately in full at the end of that, whether it's a 30, 60, 90-day period of time. And if you're not able to make that, that will absolutely have negative impact on your credit.
So what are some of the misconceptions in the media right now?
Outside of all the mortgage stuff we just talked about, I think one of the biggest ones pertains to rent. I've seen a lot of social media posts where people have said, hey, rent isn't due for the next 60 days or 90 days, whatever it might be. And that hasn't been entirely true. It wasn't until March 27th that, at least in California, our governor put a moratorium basically on rent and evictions and all that good stuff. I think it's from March 27th to May 31st. So, but there's a couple details that are left out. For instance, if you miss a rent payment during that time, you have to notify your landlord within 7 calendar days. And the other thing that they're not really talking about is it's kind of like the whole forbearance thing. Like at the end of that period,
it's due.
It's due. Right. And the wording right now is within a reasonable amount of time, which is kind of subjective. I mean, is that 10 days, 50, 20 days, a month, 2 months? So regardless, going back to rents, just know that if you're not a homeowner and you're in a rental scenario, you do have a little bit of a period of time where those rents aren't going to be due, and it won't impact your credit negatively. But just like with the mortgage, they are going to come due, so just be prepared for that.
All right, so any other thoughts before we wrap this up?
Yeah, I think, again, we're experiencing something we've never been through. And so I think over the next month, 2 months, I think each and every week is going to bring
something different.
Yeah, something different, something new. So I think going back to mortgages or even rents, I think the most important thing you can do. Again, we work in California, so if you're one of our clients or somebody in our local area, whether it's us, your agent, your lender, don't just, just because one thing was said in, the media or on social media in March doesn't mean it's going to necessarily hold true in April. So
it changes daily right now, sometimes a couple times a day.
Yeah, sometimes a couple times a day. So, reach out, take advantage of us, reach out to us, pick our brain. If you, are interested or need that forbearance on your mortgage, like I said, get that in writing from your mortgage company. Contact us, contact your lender. If you have any specific questions on like these moratorium dates as it pertains to rent or mortgages, reach out to us. Let us kind of do, the heavy lifting and dirty work of getting all the details for you. That way you're not just relying on something you saw on Facebook, because ultimately, hopefully over the next 60 days, everybody can kind of come out of this with a little bit of a break on payments, but without affecting like your financial position or your credit.
Right, so hopefully that helped you guys, and if you have any questions, just reach out to us and we'd be happy to help.